Hi, I'm Chris Clark with LandElevated.com, and in this video we're going to talk about financing the deal. And when we're talking about vacant land, there are multiple lenders that you can work with, multiple ways to finance the deal. It just depends on how much cash you want to put down, I guess how deep your pockets are, and how you want to make this deal happen. So if you do have deep pockets, by the way, one option is to buy the land with all cash and then get the financing afterwards. Some of the benefits are a lot of times the seller is willing to provide a cash discount for the property, and then it'll give you time to shop around further for the right lender and for the best financing that you can find. So if you do have the ability to do that, that may be a way you want to go. You may be able to save some money there. Just want to note that at the beginning of the video. But for most of us, we're going to need to take a loan right off the bat to purchase the vacant land. So a couple things about working with lenders. Lenders want to know the risk that they're taking. So they want to take as little risk as possible, and they want to make sure that they're not going to have to take the land back. And if they do, they've got plenty of equity in it and they'll be able to sell it fairly quickly. So they're going to look at things like your credit score. They're going to want to know how much equity is in the property right off the bat. A lot of times they'll require a pretty high amount. A lot of times they'll also make you do a survey, an appraisal. You may need to do soils tests. It just depends. There may be multiple types of surveys that they will require before they issue financing for the property. And in some cases, you may even need to have plans depending on what type of loan you're going to get. Now, when we're talking about different lenders, one of the first types of lenders we'll talk about is just commercial lenders. So when we're talking commercial lenders, think Wells Fargo, Chase Bank, Bank of America, the big banks that are out there. And so when we're looking at working with one of the commercial lenders, if you go into one of those banks and you say, "Hey, I'd like to get a loan for this vacant land," they're gonna put you in touch with a loan officer. You're gonna work with a loan officer to go through the approval process on buying the vacant land, and they've got, one of the pros is they've got a very clear process. So the loan officer will sit down with you, pull out the application process, and they'll start checking boxes. And it's nice because if you can check all the boxes, you can get usually a pretty good loan. They've got good terms. Typically, it's 5 to 15-year terms. They'll amortize it over a longer period, like a 20 to 30-year amortization period with a balloon payment at the end, which is cool because it'll lower your monthly payment. Some of the cons are, though, because they've got such a clear process, they're not as flexible usually or as creative. So the loan officer can only do so much to help you get the loan. It's got to fit within their brackets, though. So if it falls a little bit outside either way, it's not going to get approved, and you won't be able to get a loan from one of those banks. So that brings us to the next option for financing, known as owner financing or seller financing. This is when the seller of the property is willing to finance the deal for you. So they'll usually require a down payment, and they'll require monthly payments. The terms just depend, so you got to work on that with the seller. It does work just like a commercial loan. You're going to be making payments during over a certain period of time and at a certain rate, but it depends on how you work the deal with the seller as to what those payments look like. So some of the pros are, though, it's very flexible in most cases. The seller is usually willing to work with you, and you can structure a deal that works well for both parties. A lot of times they'll require less of a down payment. I didn't mention this before, but a lot of times banks, the down payment is between 40 and 60%. So you'll have to bring roughly half the cost of the property to the table at closing. But with seller financing, a lot of times they're willing to take a lower down payment. And the other thing is they'll have a limited application process. You don't have to go through a super lengthy application process. Like with a bank, you're checking all those boxes. You might have 25 pages of an application. But with a seller, it's usually a little bit simpler. I mean, for example, they may not even check your credit. It just depends on how good they feel about you and how good they feel about having to take the property back potentially. But they're using the property solely as collateral, and they know the property. They're the ones selling it. They probably owned it for a long time. They know what they can get for it. If they have to take it back, worst case scenario, they can resell it again. So cons, possibly a higher interest rate. It just depends. really on the seller and what type of deal you work with them. So the next option we'll talk about is private money. And private money is when another party will come in and lend you the money for the property. And this is known as a hard money loan in a lot of cases. But someone who's in the business, an individual or a company is in the business strictly for making loans, but making money off those loans. They'll use the property as collateral, the same thing. They know they're taking a higher risk here, so they will usually try to make as much money as they possibly can for that. And that's one of the pros is they are usually a little bit more flexible. They're not as flexible as sellers, but they're more flexible than a commercial lender. Con is they're usually going to charge origination fees. They can be very high in some cases. They're usually going to want more money down as well than the seller financing option, but maybe not as much as a commercial financing option or a commercial lender. And they'll usually charge a pretty high interest rate. So that's the next type is the private money loan. Another option you can go and buy vacant land with is a USDA loan. So you can work with the U.S. Department of Agriculture, and they offer various types of loans which they subsidize. These are usually for borrowers that fall in the low to mid income bracket, and for areas that are more rural. The USDA knows they have coverage areas that they work within where there's not a lot of homes anyway. People are going to have to buy vacant land out there, whether they're going to live on it or not. But the USDA can help. If you're a business owner, another option is an SBA loan. So you can go to the Small Business Administration, and they offer a couple loan programs depending on what you're going to do with the property. They've got an SBA 504 loan, which is for the purpose of buying the vacant land and building a structure on it for your business. Another option is an SBA 7A loan, which is for commercial real estate. So the SBA could be an option if you own a business and you're going to use the land for the business. Another option is a home equity line of credit. So if you already own a home, this is a great option. You can go to you can say, okay, I've got this home. It's worth $500,000, but I have $200,000 of equity in it. I can get a home equity line of credit for that $200,000, and that's essentially like the bank is going to give you cash, and you can do what you need to do with the cash. It's a line of credit based on the equity that you've built in your home, and we work with a lot of buyers that use home equity line of credit to finance their purchase. You may also hear them referred to as a HELOC, but they're a great option if you've got the equity in your home. The next option we'll talk about is construction loans. So if you already know what you're going to do with the property, you may be eligible for a construction loan. This is a great option because it allows you to buy the vacant land and also to build or to pay for the structure on it. So you usually will have to come with approved plans to the bank. The bank will want to make sure that they review the plans. They will be signing off on all the plans, and then you can get a construction loan that will take care of the funding for the purchase of the land and all of the construction costs that are associated with building your home on the property. It's a great option if you've already got the plans. So those are the types of financing that we'll talk about in this video. There are certainly other ways out there that are even more alternative, but for the purpose of this video, we'll just stop there. What I'll say though is all lenders have one thing in common. They want to incur the least amount of risk to ensure that their loan is paid back in full. So know that the more that you can prove that they will be paid back and they're taking as little risk as possible, then the better terms you'll be able to get for the loan, the more likely that you'll be able to get the loan in the first place, and everything will work out fine. So if you like this video, comment below. Let us know if you have any other questions about financing. Love to help with this side of it. And if you'd like more information, check out our site, landelevator.com. We've got all sorts of information on buying vacant land. And thanks so much for watching.